Okay, learning objective 4.3, prepare financial statements from the worksheet. Okay, financial statements are prepared from the worksheet. To ensure the accuracy of the figures, we double check all. All entries are recorded in the appropriate column. The correct amounts are entered in the proper places. The addition is correct across the columns. The columns are added correctly. Preparing the income statement. When preparing the income statement, it is important to remember the following. Every figure on the formal statements is on the worksheet. No debit or credit columns ever appear on the formal statement. The inside column on the financial statement is used to prepare subtotaling. Withdrawals do not go on the income statement. They go on the statement of owner's equity, which is on the balance sheet. Okay, so from the worksheet, you take the following from the income statement columns. You have your revenue, but remember you have your heading, and your heading has to be for the period ended. So in this case, it's for the month ending May 31st. You have you start with the company name, the income statement, and then for the period ended. You have your revenue subtotal, and you list the one revenue account. If there was more revenue accounts, you would put that on the column adjacent, up in this column here, and subtotal, and put your total over here. But your expenses, you have your operating expenses, so you move all your expenses here, you list them all. Remember, top of each column has a dollar sign. No debits or credits on an income statement. You subtotal total operating expenses, so you add up all your expenses, and then you take your revenue minus your total operating expenses to get your net income. Again, you have a double underscore and a dollar sign to get your total amount of net income. If expenses were greater than revenue, you would have a net loss. Okay, preparing the statement of owner's equity is the second statement we have to prepare. Remember that. Check and verify if additional investments were made. Check the capital account to determine if the amount is correct. Note how net income and withdrawals aid in calculating the new figure for capital. So here's our statement of owner's equity. Again, we have the company name, the name of the statement, and then for the period ended, in this case for the month ended May 31st. We have our beginning capital, which comes from the balance sheet column. We have a dollar sign at the top of each column, right? We add our net income, which comes from your income statement, less withdrawals for May, which is here. And then we increase, so our increase in capital is your net income minus your withdrawals, and then your ending capital is the net of your beginning capital plus your increase in capital gives you your ending capital. So this one figure is not on the worksheet. It is calculated here and used to prepare the balance sheet. Note that no additional investments were made during May. Okay, if there were additional investments, you would add them here. One thing I did say incorrectly, I think, on the last slide is that withdrawals is on the balance sheet. Withdrawals is in the owner's equity statement, which then does end up going to the balance sheet. So as you get more into it, sometimes on the balance sheet they actually list withdrawals rather than bringing it all over in a capital amount. But for your sake, the withdrawals is on the owner's equity statement, as was mentioned before, but I think I said which then goes to the balance sheet. So just want to make sure you're not confused. Okay, so preparing the balance sheet. Remember that the totals on the worksheet do not match the totals on the balance sheet. Information is grouped differently on the formal statement. Accumulated depreciation is subtracted from equipment. and withdrawals are subtracted from owner's equity. Okay, so here we have our account titles, and this is just a snippet from the balance sheet, or from the worksheet, just the balance sheet columns here for demonstration. So you have your balance sheet, you have your company name, the name of the financial statement, and as of a particular date, remember as of May 31st, you have your assets here. So you go up here, you have your assets listed first, you bring those assets and put them down here. Now remember, computer equipment less accumulated depreciation, which is your contra asset account, to get you your net carrying value of that computer equipment here. So that's how that should be illustrated. You have dollar signs at the top of each columns, and then you have your total assets there. You also then you grab your liabilities. So you got your liabilities owner's equity section, your liabilities, which is just accounts payable, salary payable, and your total liabilities and your subtotal with a dollar sign. Then you have your owner's equity section with Rob Sinclair Capital, which comes from your owner's equity statement that we prepared on the slide previous. So the 14,275 comes from, right there, 14,275 from this owner's equity statement. Okay, which they have that reworked up here as well. Okay, and then you have your total liabilities and owner's equity balances to your total assets. If this doesn't balance, you know you're in problem here. But notice these do not agree to the totals here, okay? Because you're grabbing from the owner's equity and the withdrawals are not really demonstrated. Your owner's equity includes net income to get those two in balance. Okay, and that concludes Chapter 4. Good luck on the homework.